The thesis is, as I'm sure most of the audience is on board with, the monetary and fiscal policy. And the specific numbers just come from looking at previous peaks. And if you adjust those for inflation, that's what takes silver actually above 170 and gold above 2,700. And I just can't see it stopping there. I think it would keep going for a while. So this is not a prediction in the sense of, by X date it will reach this price. This is my expectation. I think at the very least, before this particular bull run is done, we will see those prices in gold and silver. For our gold and silver bug friends out there, could it go much higher? Yes, absolutely. If the US really goes off the rails and the dollar implodes, sure, it could go much higher, many thousands higher for gold. But who knows if that's going to happen? I'm not going to go out there and make that call. I'll just say that card is in the deck. History never repeats exactly, right? It only rhymes. Sure. So, but that's not an unreasonable expectation. And honestly, if you look at the real world, never mind the charts, what's going on in the real world? 4 years from now, can the powers that be really kick the can down the road that long? It would seem like with the charts just going through the roofs on the national debt, the Fed's balance sheet, U.S. to GDP debt ratio, things like that. It seems like something's got to give before then. So I don't think that's an unreasonable time frame, David. If you look at the crash of 2008 as a starting point, and then on up to the peak in 2011, the proximal cause of that fear injection in the markets in 2008. Well, that's 3 years. So if you look at last year, March of 2020 is the crash this time around. Well, we're just, barely over a year after that. So there's plenty of room to look for those higher prices that I expect. We talk about these prices a lot, David, and people get upset because I'm not bullish enough, or they get upset because I'm not realistically bearish enough. I'm giving you my outlook. I'm not making a prediction. And by the way, I'm telling you how I'm investing according to that outlook. That's where the money hits the road, is I'm putting my money where my mouth is. I might be right, I might be wrong, but this is what I'm doing. And you're asking what I'm doing, so that's it. But silver, though, that's why I've been particularly looking for great silver stocks. And unfortunately, there's so few primary silver stories. And sorry, all my silver bug friends out there, so many of the ones that are out there have warts. There are serious due diligence questions that we should be asking ourselves about these silver stories. And just because it has silver in the name, or even some silver in the drill results, doesn't make it a great speculation. But that's the mining business. Separate question in a way.
We're going to get to that
your
later,
point.
yeah.
But yes, it's precisely because silver really has gone that high, right? It's gone plus or minus $50 twice before. And if you adjust those numbers for inflation today, that's how we get to that number, David. Will it go that high? I don't know. Could it go that high? In real terms, it has twice before. So yes, I think it could. I mean, markets are buyers and sellers coming together, and a price is whatever clears the market. And if you are, as most gold and silver investors and stock speculators are, most of us are hard money advocates. Most of us believe in free markets, free enterprise, the free price system. Now, I understand that there's concerns about manipulation in the space, but the point is that a price is whatever buyers and sellers agree on. It actually makes no sense intellectually, philosophically, or from our overall worldview perspective as advocates of free markets to say what the price should be. It is whatever buyers and sellers agree. Now, is the market distorted? Sure. But the price is what it is. And if you're going to be insulted by a price, think about insulted. You're going to be insulted by a price. Well, that tells me that people who feel that way, they're being very emotional. And that's very dangerous. That was really the point of the article that you mentioned, which is available for free on the website. It's called Don't Hold Your Breath, or Investors Never Hold Your Breath. Lessons from scuba diving, where holding your breath is very dangerous. And I think that applies to investors. I think it's just look at the successful people out there. Look at your Rick Rules of the world, or even Doug Casey. They're very different personalities.
Yeah.
But both of them are very relaxed, very calm. They roll with the punches. They don't get upset. They don't get insulted. When have you ever heard a billionaire say, "Oh, I'm insulted by this price"? That, they're not emotional about these things. They say, "Oh, well, that didn't work out," or they say, "Oh, well, that's an opportunity." But when everybody can see that coming, it leads, right? So the fact that gold is up, in response and ahead of all these incredible things in monetary and fiscal policy that the powers that be have done, right? Gold hit 2,000 last year. That was a leading indicator for the inflation that we're seeing now.
Yeah.
So there's nothing wrong with that. That's people rationally saying, "Oh, look what's coming. The bleep is coming down the pike and about to hit the fan. So this is a good hedge. Let's move in this direction." And they did. That's how these things work. Well, two things. One is I own gold and silver bullion. I've got a stack of my Canadian wolves right here. Haven't had a chance for midnight gardening yet to put that away properly. But I don't own those because I think the price of silver is going up to 150 or whatever. I own it because it's silver. And come heck or high water, that's a conversation you and I have had. My real life story about how my childhood silver coin collection fed my family in time of dire need. And I have more savings in gold now than silver. But that's what it's for. I'm not worried about the price. My reason for stacking has nothing to do with where gold or silver prices should be or are going. As a speculator, I do speculate on the stocks. And for that, whether gold and silver will go higher does matter. If they've peaked last year and it's all downhill here, and I'm being a mindless cheerleader, oh, they're going higher, that's bad. That would point people in the wrong direction. So I'm trying very hard not to do that. I think all the reasons for gold and silver to go higher are fully in force. I think that a lot of it was priced in advance. I think the crisis in 2020 pulled forward a lot of that into 2020. So it is natural for there to be a period of correction and consolidation now. I don't see anything wrong with these markets at all. And if people are frustrated, I promise I'll give you a chance to talk, David.
No problem.
My advice to them is to go to the Kitco website, go to the gold price chart, that nice black chart with those dramatic, bright colored lines. But don't look at that. Look at the little box next to it. There's a little table there that shows you the price of gold change over the last 30 days, 6 months, year, 10 years, and since 2000. And all the numbers in the red are short term. So if you're feeling pain and you're feeling worried because gold isn't doing what it's supposed to do, look at the long-term numbers and understand that the problem, or the red, is short term, and the opportunity that means given the long-term scenario. That's the bottom line, David, is I think this negative sentiment, this bearishness that's pervaded our space is a fantastic opportunity. And I am putting my money into that now. I've been bidding for stocks this week. I've been, my stink bids have been too stinky. I haven't gotten filled yet, but I am putting my money where my mouth is and what I'm saying to you right now, David.